G'day folks, Jim here, 3rd of February, thanks for tuning in. Well, the dollar finished reasonably firm at the end of last week as we head towards this Friday's non-farm payroll data. The euro was under a bit of pressure. There was some soft data out of Germany, the retail sales, and also the CPI was weak, leading the market to suspect that the ECB may cut rates at its meeting on Thursday. Elsewhere, the yen strengthened and the Kiwi was under a bit of pressure, basically on some emerging markets concerns. But we'll go and have a look at the charts and start off with the euro. Now, as we can see, the euro's finished, this is an hourly chart, finished pretty much on its lows where it started off this morning. It broke support. Everyone is now very bearish on the euro, having broken this. And indeed, yes, we could come back down and we could come down to test this 134.30 area, and below there's some support at 134 and 133.5 or so. The charts do look a bit bearish. The dailies are beginning to point lower. The 4-hour charts equally are heading south. So I think the pressure does remain on the downside. We've got the EU PMIs today though, and a better reading from them would see a bit of a correction higher in the euro. I'm not sure that we're going to go much above 135.5, and I certainly don't think we're really ready to go above this the 100-day moving average, which is at 136.02. So I don't think we're going above there. And if we do see a move up to this the trend line, I think it's probably a sell into the short squeeze for another test of the downside. Dollar yen. Well, the dollar's really it's been in this 102, 103 range for a few days now. It does look as though we could see a break of the downside, although there's pretty good support down here. This 101 3/4 area, and we need to break below 101.60 really to provide us with any kind of momentum. Until then, it might just chop around above the previous lows. The emerging markets concerns will continue to dominate trade, I suspect. I'll also keep an eye on the US stock markets as they're moving pretty much in line with the yen at the moment. And if we do see a fall in the Nikkei today, that could be the catalyst to push the dollar a bit lower. Further out on the dailies, as I say, if we need to break this support, and that will bring us down towards this 101 level, which is the 100-day, and then 100, which is the 200-day moving average. On the top side, I don't think we're really going much above this 103 level today, and it may be that we just chop around, but I do think the direction ultimately is lower, which means if the euro comes lower as well, the yen crosses, they're all going to take a bit of a southbound route, and I think that looks quite likely. Swiss yen and sterling yen both look a little bit bearish as well. Sterling itself against the dollar, well, that's trying to break down below this rising trend support. It's sitting right on it at the moment, and 164.30 is pretty good support. That being the weekly Tenkan, and so I don't think we're probably not likely to go below there for a little while. We have got the UK manufacturing PMI later on today, and also we've got the Bank of England on Thursday, which in line with the ECB. The Bank of England is not really expected to do anything, but the charts are pointing lower for cable, and I think it's going to remain under pressure. The dailies are beginning to they look as though they're trying to wind up some momentum to the downside. Now, if we break this level, then I think we couldn't see a fairly swift run down to 163 figure 10, and below there towards 162.5. The top side probably limited to this 165 area. I don't think where the descending trend line would come in about 165. Don't think we're going much above there today. Dollar Swiss, I kind of like the dollar, as I've said before. But we're running into some short-term resistance up around here, 90, 95. Possibly won't go above 91 the figure today, but equally if we sit back around 90, 30, I think I'd probably be a buyer. So trade that range. The 4-hourly charts though look as though they're winding up to me to test the run for the top side, and the dailies. Well, the dailies are a little bit flat, so it could remain choppy. But I do prefer buying dips on the dollar, looking for an eventual test of this this high up here at sort of 91, and as I say, and then the trend line resistance at 91.5. The Aussie, well, that's looking okay this morning. It's at 87.60. Now it had a reasonable range on Friday. It spiked higher, got up to 88.20, fell apart on the emerging market concerns, but has recovered, and now it's sitting here against some short-term resistance. The Chinese data over the weekend came out pretty much as expected at 50.5 for the manufacturing PMI. Now that's still above 50, so it's given the Oz a little bit of a boost this morning. There's some domestic data out today, ANZ job ads, the TD inflation numbers, and also the Chinese non-manufacturing PMI. So that's going to drive the Aussie today. But overall, I kind of like the Aussie for a little bit of a squeeze higher. This is an hourly chart. So for the Asian session, it looks reasonably well underpinned. Although don't forget China's on their New Year holiday, so it's pretty thin. The 4 hourlies, though, are pretty flat. And the dailies, well, the dailies they do have some bullish divergence. Possibly today, though, 87, 88 will cover it again. But overall, I like a little bit of a squeeze higher. To look at this 88.25 top, which could take us back up here to this sort of 88 or 85 level, which was the previous high, and then just to the 89 first FIBO area. But for today, as I say, 87, 88 possibly covers it. The Kiwi, well, that took a nasty hit on Friday. I think the follow through from the RBNZ, leaving rates unchanged, flushed out any further Kiwi longs, got down to 80.60, and it's recovered from there this morning to sit just above 81. So there's a little bit of a gap on the charts, as you can see, as we start the week. But the trend now looks firmly lower. We might see a bit of a squeeze back up towards this sort of 81.50 level, possibly even to where are we here? So 82 the figure. I don't think we're going much above there. The dailies, they look as though they're building some reasonable momentum to the downside, and if we are to head lower, the 100-day moving average is now at where's that 181.35.40, so that's going to provide resistance, and on the downside 80.30 looks to be the first port of call, which is 61% of this whole move up. Today a little bit choppy, but I prefer playing it from a short side, looking for a move lower, given the outlook on the daily indicators. That's about it for today. As I said earlier, we've got the manufacturing PMIs out of the EU, and then the ISM out of the States. Apart from that, there's not an awful lot around, except there is a bit out of Australia. We've got the ANZ job ads, we've got the building permits, and also the Chinese non-manufacturing PMI. So it could be a reasonably busy day for the Aussie, although, as I say, liquidity is going to be thin in the absence of most of Asia. So that's about it for today. Have a very good one, and we'll talk to you tomorrow. Cheers.